All right, we're going to talk about rental property today. What are the trends in the market right now? What are the challenges you're going to see as a landlord? This video will focus on purchasing properties. We'll come out with another rental property today video that focuses on rent and making money through cash flow of your property. Stick around to the end for a future prediction of what I think will happen over the next 6 months to 1 year. And now we'll go into the slides. So, current market conditions. Right now, interest rates are at all-time lows. It's reported that you can get 30-year fixed-rate mortgages at 1.99% as an owner-occupied property. As an investment property, you can get them as low as 3.5% or possibly lower with good credit and good down payment. The current conditions also have very low inventory. The July numbers, which are out from Zillow, show roughly 300,000 less houses for sale in the United States. That's a lot less than last year. Looks like there's 1.5 million for sale now, and last year there were 1.8 million. Okay, so we have an inventory crunch, and what's happening, most of the inventory that was sitting on the market's all been snapped up. All those bad properties were snapped up. Everybody's buying stuff, at least outside of the major cities. Let's not forget about wonderful New York, Los Angeles, San Francisco, Chicago, Miami. Everybody's running as fast as they can. Heck, the moving companies are they need to go to the hardware store and buy a rake for all the money they're bringing in, moving people out of these metropolis areas that are complete garbage now, given the global situation with the sickness that I can't mention because I'll be demonetized. Not that I'm monetized anyway, but maybe in the future. Hopefully you got to hit that little subscribe thing down there for me to get monetized. Go ahead and hit that. So inventory super low. Prices crashing in the major metro areas, but you know what? It's hard to find a decent price in these linear markets now because the inventory's all snapped up. So prices, major metros down, secondary and tertiary cities up a little bit, linear markets holding steady if not up a little. And then those cyclical markets like Denver and Tampa, they're still high. They haven't been affected and they have low inventory. Okay, that's your current market conditions. Next slide. With interest rates so low, it's making houses more affordable. What you can't get a loan on in a lot of cases is foreclosures. So now in September 2020, we're seeing foreclosures coming on the market that were put into forbearance 3 months ago or that were prevented from being foreclosed on by the CARES Act or whatever the other federal laws are that prevented foreclosures. We're seeing those come on the market now. So where you'll see this affect everything, as the supply increases of foreclosures, a lot of investors that were forced to purchase actual livable homes, they'll now switch over to buying their foreclosures. So there'll be less pressure on the inventory for standard 30-year fixed rate, and these investors are going to try to purchase their fixer-uppers and flippers like they're dolphins. Like they just want to buy the house, flip it, and make an extra 50 grand. But you know what? A little early prediction here. They're going to go ahead and get caught holding the bag like they did in 2008. Okay, here's time on the market. So as these foreclosures increase and the foreclosure inventory increases, we're going to see time on market for everything from single family all the way up to multifamily residence go way up again. Thank goodness we'll be able to find some good properties that were probably overpriced at this time, not bought up, and then have sat there for 200 days. That'll be in probably about another 180 days. So 6 months from now, we'll see a bunch of properties that have just sat there because things were selling like hotcakes last month, and now it's going to start slowing down because these foreclosures are coming on the market. It's about time. Okay, so for competition, we mentioned the average price and how investors have been forced over the last 3 or 4 months to purchase actual houses instead of foreclosed houses. So these investors are going to be able to switch back and have plenty of juicy foreclosures coming up in the next 3 months here and coming up right now, actually. So we're going to see a remix, I believe, of 2008, where so many foreclosures come on the market, it drives the average price of everything down, time on market up, and decreases competition overall. It's about to be a great time, and next couple slides we'll figure out about when that's going to happen. All right, next slide. So the next thing that happens in a nice cycle like this, I recreated a U.S. credit score chart. This right down here is about 650. This up here is right about 700. I didn't bother writing it in because my handwriting's really bad and it's not easy to write numbers nowadays. Okay, so people's FICO, their credit score in 2008, the chart looked like this. It went, oh, happy, going along, whoops, oh, down the hill. And then nobody could buy a house because everybody had bad credit, and only investors and those who made it through that 2008 crash, were able to purchase houses. So over the last 12 years, credit has done this again as far as consumer credit goes. And right now we kind of peaked, and guess what? Now that we're in another recession, possibly a depression, consumer credit is just going to crash back down again. So nobody can buy a house again, and that's also going to have good influence on inventory and the availability of properties for you as an investor. The main thing to do, and this isn't financial advice, this is a YouTube channel. If you want financial advice, you should call your financial planner or your stockbroker or somebody that's like certified to advise you. That's definitely not me. This is definitely YouTube, where I write things in chartreuse or whatever color that is, and I talk about ducks and quack a lot. So, anyway, back in 2008, everybody's credit crashed. The people who made it through, ideally during this downturn here, you want to make it through and maintain the credit score you have. Don't worry about increasing it. Try not to let it decrease. Just maintain your credit score. That way, when these foreclosures hit the market and the real estate market takes a dive like this with the credit scores, you can go ahead and pick up some good deals on properties from motivated sellers. We have another video on motivated sellers. You should check that out. It's kind of our negotiating real estate video. It's a good playlist. Maybe I'll link it up here. I'm going to try to link it up here. Okay, good. So yeah, anyway, what's going to end up happening this year, next year, people's credit's going to crash through the floor. They're not going to be able to buy houses, putting further pressure on the housing market. So prices will come down, inventory will go up, time on market will go up, and you'll be able to find yourself some great deals. All right, next slide. So population movement, we mentioned that the prices in big cities, you have your Los Angeles, San Diego, San Francisco, Seattle, Portland. Not Portland's not a big city, but we all know there's some big problems there right now. Chicago, it's right here. This is a map of the United States, by the way. It looks like this guy's with a frowny face right here. That would be Florida. So New York's over here. Everybody's moving out of there. They're moving out of all these places. And I circled right here where you want to be looking. Check it out. Like Miami's down here, like right in here. You're going to want to go ahead and avoid Miami and all this, but that's why it's not circled. So pretty much everything else here is fair game. It's where everybody's moving, and you're going to have a good time over the next 5 to 10 years with population movement. People migration. They're like ducks in the winter. They just kind of fly south, except when people move down there, they stay there because they realize, hey, it's nice and warm near Atlanta. I don't have to deal with a blizzard in New York City where they can't even plow the streets right now because of all the problems. So yeah, check it out. You'll want to check these areas out. We do another video on where to invest. Check out the channel for that one. There you go. There's some current real estate trends for this day and age. Now we're going to go to the future predictions. Okay, for predictions, we have December 2020. a lot of people's homes that they put into forbearance and they're now not able to afford now that they have to pay for it again. Remember, forbearance periods are 3 months. So people could put their property into forbearance for 3 months. Then they could extend it for 3 months, then another 3, and then another 3. They have to do this every 3 months. It's not automatic. So these people haven't extended their forbearance, and some others will not have extended it 6 months from when it started back in March, which is September 2020. So you'll see a bunch of foreclosures. You'll see 2 sets of foreclosures from 3 months and 6 months out into the global sickness problem come on the market all at the same time right around December. You'll have pre-foreclosures that ran out 6 months in September, basically, and you'll have the normal foreclosures that ran out in June. The normal forbearance that ran out in June, I mean. And then, so coming around, you're also going to see 12 months out from March, so right around April 2021 and March, April 2021, all the forbearance runs out. So you'll get a whole flood of foreclosures, and then you get all the pressure on the pricing that we spoke about earlier. Ooh, after that slide, real quick, hang on here. So yeah, April 2021, foreclosures. This is all going to be multiplied by 4 from what's going on right now. All these foreclosures now, it's 3 months worth. Well, guess what? In 9 months' time, you're going to have an entire 12 months worth. You're going to have the ones that weren't bought right now, all of them that were put into forbearance for 6 months, 9 months, and 12 months on the market. It's going to be an incredible time to be an investor. If you have cash, you can probably pick up some foreclosures. If you want 30-year fixed rate mortgages, then you're probably going to have great prices on standard houses because there's going to be so many deals on foreclosures. If you were around in 2008, just imagine that happening again. It's going to. That's what's going to happen. Everything will be foreclosed. The prediction for that, like we said, we'll go back to the slide. Again, just a prediction. That'll be April 2021. All right, our full year 2021 trend, it will look something like this right here. We have the real estate market right now. It's going up, going up. Oh no, now it's right now, and it starts going down because of the foreclosures. Oh, 2021's right here. That's January. Oh, everything's going on the market. Oh yeah, then we're down here. We're talking 20% declines in prices, 30% declines in prices. Yes, it's going to be crazy. We'll see exactly what happened in 2008 happen again. It's going to happen right here, March, April. It's going to be good. Keep an eye on this section of next year, 2021. And you're going to see that go for the entire rest of 2021. And then into 2022, nobody's going to have the credit to buy anything. You're going to, as long as you maintain your credit, you're going to be able to go out there and pick up houses left and right. It's going to be a good time to be an investor. And there'll be plenty of opportunities. We'll talk about the opportunities in another video. And here we go. This is going to be it, our last slide. So that's your rental property today, September 2020. You saw a prediction there. That's how you're going to make money over the next year to year and a half. It's going to be awesome. Maintain where you're at, everybody. Keep your renters happy and do your best to keep your units filled, and you'll end up really good on the other side of this. Should be a subscribe button right here, a little like down there, link a comment somewhere over here down below this little mouse thing. And then there should be another video right here for you to watch. All right, hey, y'all, take her easy out there. Good luck.